Welcome to Talker Tickers, where we break down the earnings calls that really matter. Today, we're digging into a fascinating one from Constellation Energy. They actually missed on their profit numbers, but the stock rallied anyway. So we're going to break down exactly why that happened and, more importantly, what it means going forward.
All right, let's dive right into the central puzzle of the day. You've got Constellation missing the analyst earnings estimates, yet the stock, after getting hit in the pre-market, just completely reversed course to close in the green. So what's the real story here?
And you can see that change of heart right here. The market initially sold off on that headline number, but as the earnings call went on, investors clearly heard something they really liked. So what was it that the algorithms missed, but the humans picked up on? Okay, first, let's quickly get the surface level numbers out of the way. You know, the stuff that drove that initial negative reaction.
So as you can see, it was a classic mixed quarter. Adjusted earnings per share, or EPS, came in at $3.04, which was about 7 cents shy of what Wall Street was looking for. But on the flip side, revenue was solid, coming in at $6.57 billion, and that comfortably beat expectations. This kind of split result almost always causes some confusion right out of the gate. But here's where it gets really interesting. When you start to look past those headlines, the market decided to ignore that small EPS miss because, frankly, the underlying story of how the business is actually running was exceptionally strong. And that's the crucial point here. Why did they miss? It wasn't because of bad operations. It was mostly one-time stuff that management had actually already warned about. In fact, a big piece of it was stock-based compensation. And you know why that was so high? Because the stocks had such a magnificent run. It's what you'd call a high-quality problem to have. So here's the first major clue for the bull case. This number, 96.8%. That was the capacity factor for their nuclear fleet this quarter. Just incredible. And this quote from the call, it just nails why that number matters so much. This isn't just some metric on a page. It's a testament to best-in-class, world-class operational excellence. I mean, think about it. Being 4% better than the industry average with a fleet this massive is literally like getting a whole extra nuclear reactor's worth of clean power. For free. That's a massive competitive advantage. And the second big reason investors piled in was the guidance. Now look closely. They didn't cut their guidance for the year. They tightened the range, and most importantly, they raised the bottom end. When a company does that, it's sending a really strong signal of confidence and visibility into how they're going to finish the year. All right, let's zoom out and look at the big picture. Because beyond these quarterly numbers, the market is laser-focused on the huge strategic moves that are building this company's long-term future. Really, investors are looking at three main things. First, this transformative multi-billion-dollar deal for Calpine, which is going to add a ton of what's called dispatchable power. That's the stuff you can turn on whenever you need it. Second, the absolutely unstoppable demand from data centers and AI. They need power 24/7, and really only nuclear can provide that cleanly. And third, some key regulatory wins that just remove a lot of uncertainty around their biggest assets. And on that data center demand, the CEO, Joe Dominguez, he was crystal clear. He said the conversations they're having now are on a whole different level. Customers aren't just kicking the tires anymore, they're sophisticated, they get it, and they walk in the door knowing exactly what they need. Firm, carbon-free nuclear power, and they're ready to make a deal. So, putting all of that together, let's wrap this up with our forward-looking take on Constellation Energy. We are initiating coverage with an outperform rating. The market absolutely got this one right on earnings day. You have to look through the quarterly noise and focus on the durable, long-term value drivers here. The crucial point from here on out is that the stock isn't going to be driven by small quarterly beats or misses. No way. The price action is going to come from tangible news on these big catalysts, closing that Calpine deal, announcing a big new contract for an AI data center, and just continuing to execute flawlessly. So how do you think about this from an investment perspective? For our final segment, here's an idea for the investment committee. So you have this really interesting disconnect, right? Short-term results might create some volatility, some noise, but that long-term strategic reality is incredibly powerful. One way to think about playing this is by using long-dated call options, say 12 to 18 months out. This lets you capture the potential upside from these huge AI and M&A stories as they play out, but it also clearly defines your risk. It's really a way to bet on the big picture without getting shaken out by the small stuff.
This is not financial advice.